IPOs are hot right now, initial public offerings, maybe hotter even than the dot-com boom. Now, a lot of people make a lot of mistakes by rushing into these hotly anticipated IPOs. Today, I'm going to give you the number one strategy to trade these IPOs, initial public offerings, successfully. Hey everyone, before we get started, be sure to like, share, subscribe, and if you're on YouTube, ring that bell to be notified as soon as we drop a new video. We're still expanding the channel, new podcasts, new how-to videos, going live every single day. Ring that bell to be notified. All right, let's get started. I'm lead trainer with Stocks to Trade, Tim Bowen. We're going to be talking about IPOs. You know, depending on when you watch this video, one of the biggest ones out there, Robinhood. We're actually going to be talking about that today and why this strategy applied. And keep in mind, you know, I know a lot in social media and particularly social media in the finance circles, a lot of cherry picking out there. So the reason I bring that up is I'm talking about how this strategy worked almost perfectly with Robinhood, HOOD. But here's the deal. You can go back to probably 2 or 3 years ago when we first really got active on the channel. And if you look for videos that I've done about IPOs, it's very similar to this strategy, okay? Now, I still want you to watch the video. I still want you to learn, but my point is I'm not just cherry picking Robinhood or Traeger grills because they're the IPOs du jour. The point is I'm giving you recent examples of why this strategy works and how to employ it. All right, that being said, let's get to work. So keep in mind, I want you looking at the hotly anticipated IPOs. Now, there's many different ways to do that. Probably the worst way to do it is to Google IPOs. I talked about this in a recent video. It just really bums me out how finance, especially trading, especially as we've gone into this post-2020 world with the explosion of everyone being a day trader, but the quality of information, especially on Google. I mean, so many people are just gaming the results with these. I think it's, at some point, I think it's like AI writing some of these articles because it's like they're all the same, but they add in the SEO terms. So that being said, you can Google upcoming IPOs, but geez, good luck with that. You can, if you work hard enough, you can probably find it. Now, I think the best way is to have breaking news chat with Stocks to Trade. You know what breaking news is? Two guys that have over 25 years of experience tracking the news each. 25 years each, okay? It's basically 50 years combined. And what they're doing, you know, they're monitoring the Bloomberg terminals. They're monitoring every single news feed out there. And then they curate that news and they give you a good, actionable list of IPOs in play. Another great way, check out Pre-Market Prep. Every day, 8:30 Eastern, I'm live. If there's a hot IPO that day, we're going to be talking about it. Now, I'd like you to be a little more ready than day one. That's where breaking news comes in handy. But again, if you're on Pre-Market Prep, the day the Robinhood came out, we talked about it. We talked about this approach, okay? So I want you caring about the hotly anticipated ones because understand we're looking for emotion. We're looking for irrational exuberance, as they say. We want these stocks to trade ridiculous volume, to break through key levels, to do red to greens, to do dip and rips, to do VWAP holds, all of these patterns we look for. So the more buyers we have, the more anticipated they are, the better the chance for that, okay? Then what we're going to do, day one, and this is the most unpopular part of this video, probably like half of you are going to close the video right now, but day one of any IPO, I don't care what it is. I don't care if it's Robinhood. I don't care if it's Apple. I don't care if it's SpaceX, Neuralink. I don't care what it is. Day one, in my opinion, for you, the newer trader, that's why you're here, they're all ignores. Because day one, you're playing guessing games. And you're better off, I mean, and I honestly mean this. If you're going to trade a day one IPO, you're better off going to the casino. Because at least at the casino, you have 50-50 odds. Okay, you can go to you can go and put money down on a coin flip or whatever your game of choice is. You get a free drink. Maybe you take the wife or the husband for a nice dinner and you have a good time. Maybe you win money, maybe you lose money, but at least you have a good time. If you're trading day one IPOs, I think the odds are like 80-20 you're going to make money. Now, you might make money, but it's not a consistently repeatable strategy, and you're not finding an edge. And if anything, even if you do make money on day one, I think it rewards bad behavior, and any of those profits you make, you'll give back on the next IPO because you think you now have a strategy. So there you go. There's your disclaimer. Go to the casino instead of day one. What I want you to do is let the stock set up over a 2 to 3 day period. Now, that number is a little flexible. I look for a minimum of 3 days because what happens, a lot like Robinhood, you have day one where it's just all over the place, up, down, all over the place. Then day two, typically a red day, because why is day two typically a red day? Because it's never good enough, okay? The culture we live in, the society we live in, it wouldn't have mattered. Robinhood initially opened at 38. I can tell you, even if it went to 100 on day one, like tripled in value, people still wouldn't be satisfied. It still wouldn't be good enough. So day two, typically there's a sell-off, there's profit taking when the stock doesn't continue to gap up to 200 or something. So many people just have unrealistic expectations in the stock market. That's why so many lose. So much like Robinhood, we had that big red day, and then what I love, and this is why I just beg you to avoid the mainstream financial media. It's just there's so much bad information. Like the day before the IPO, everyone loves it. Every talking head is, oh, it's the greatest thing ever. Then the IPO closes on the low of the day. Then the day after the IPO, everyone hates it. Worst IPO in history. I mean, and you can Google the headlines. I mean, the second day, there were headlines, worst IPO in history with Robinhood. Okay. And so the more you can avoid that bad information, because and we talk about this a lot on the channel. The bummer is the reason I do this channel, the reason I do the podcast, the reason I do pre-market prep, the downside of the world we live in is it's a click-based culture, and they're trying to hype you up before the IPO. They're trying to scare you after the IPO because they want your clicks so they can sell you more ads. So you can be brainless and make them more money, or you can check out our resources and actually learn how to trade. So that being said, day two, we allow the stock to set a trend, typically a red day. Then day three, what we're looking for is a break of the IPO opening price. Again, Robinhood's perspective, that was 38. That's that area we're looking to enter. And why is that significant? Because understand, a lot of insiders, especially in this day and age, if you understand how a lot of these technology companies work, a lot of them, now not all of them, but particularly in the technology sector, a lot of employees, management, they're given shares in lieu of compensation, in lieu or in addition to compensation. So maybe you're making below market rates as a programmer at Robinhood, but they keep throwing shares at you and they're like, hey, we're going public soon. So you keep working below market rates, or maybe below your market rates. Maybe you're like a rock star programmer and you're like, okay, I'll keep working this crappy wage, but they keep throwing shares at me. So what happens when the stock goes above the IPO price is that emotional swing. Everyone's excited again. All the insiders are excited. Everyone that bought on day one, okay? The people that didn't listen to me and got bagged on day one and then day two hated their lives because the stock tanked again, everyone's great. That's the greatest thing about breaking of the IPO price. You cannot, it's literally impossible for you to be red at that point. The stock's trading at its highest price, just like we look for 52-week breakouts, etc. So you can see day three, it didn't break. Now understand, I know this is the 3-day IPO trading strategy video, but understand it's around 3 days. It's like 3 days to the first couple trading weeks is what we look for. Day three, it tested 38, didn't break. Day four, which was a Monday, by the way, which is not surprising. We come in on Money Monday, as we say. So day four, stock explodes higher, breaks through 38. You can see skips up to as high as 48 on the day before closing at 46. Next day, huge gap up into the 50s, ran as high as 85. Okay. And look at that. I mean, I know it's only a 4-day chart, but you can kind of see that cup and handle. Okay, you can see that dip and rip, for lack of a better perspective. You know, I know that I always talk about the dip and rip being more of a day trading strategy, but if you understand the chart pattern for a dip and rip, it's there. Big first move, pullback, and then a reclaim of the highs. You can't deny that that's there. Then also Cook, very similar. You know, this was another hotly anticipated IPO. Traeger Grills. Love my Traeger, by the way. But, you know, again, day one, you can see the stock had a big run, but then look at that doji candle. You can see day one of the candle. You know, when we talk about a doji candle, that's a candle where the stock runs, has big wicks, but basically ends unchanged. And you can see where this thing basically ended unchanged at 22. Another doji candle day one, the doji candle. Then another doji candle on day two. Then you get that big breakout on day three at 24. Goes as high as 25.50 that day. Gaps up day two. Goes as high as 30. A little bit of a shaky day yesterday, but then today 30 plus. Again, notice that big initial spike, pullback, reclaim, dip and rip just on a daily chart. Now, again, that dip and rip is more of an intraday pattern. There's probably like 150 videos on the channel talking about that. But again, I always do that hand motion, and you can see what happens when this breaks out to all-time highs. Because again, not to beat it to death, everyone's green. Institutional investors, pension funds, again, insiders, employees, retail investors, everyone's green. The punch is flowing, as they say, and everyone thinks the stock is going to the moon. But you're a day trader, you're agile. You don't get greedy. What we do is use the 3-to-1 risk to reward methodology that I talk about in tons and tons of webinars and tons of the YouTube. So that being said, keep in mind, really 3-step process, okay? Locate the hottest IPOs out there. Again, my opinion is the best way to do that is with breaking news. Step 2, watch it on day one. Make sure the mania stays. I mean, the biggest reason I want you watching it, paying attention, is to watch the zeitgeist, as they say. And I mean, day one on Robinhood, every website, everyone was talking about it. The day one volume, what was it? I can't remember off the top of my head. Yeah, 100 million shares on day one. You know, that tells you that, okay, now this thing's in play. Then step 3, you're just going to set that alert for that breakout level. Maybe it comes in 3 days, maybe it comes in 4 days, maybe it comes in 7 days, maybe it comes in 10 days. Then when that high breaks, your alert goes off. You enter the trade, you set your risk and reward, obviously, okay? These are volatile, fast-moving stocks. You have to have a stop. You never enter a trade without a stop, but you buy that break. You risk what you're willing to lose. Maybe it's depending on your risk profile. Maybe you got 100 shares and you're risking $1 a share for $100. Maybe you got a bigger account, you're risking $5,000 to make 50, but use that 3-to-1 risk to reward based on the breakout level. And then always, if your goal is hit, take your profits. Because listen, depending on when you watch this video, especially Robinhood. I mean, Robinhood went full vertical. It would not surprise me to see this give back a considerable amount of its gains. I mean, here we are at $60 the day we're recording this. Depending on when you see this, my opinion, we'll see. It is 2020, 2021, by the way. Wildest stock market in history, in my opinion. But I expect Robinhood to give back a lot of its gains. But if you were trading it on day 4 with a good plan and not getting greedy, not thinking it was going to 1,000 like somebody on Reddit or something, you could have made $2, $4, $5, $10, $20 a share, which is how you grow your account. So, all right, everyone, drop me a comment. Have you traded IPOs on day 1? How have you done? I mean, listen, you got a 50-50 chance. Maybe you made money, maybe you didn't. So drop me a comment, let me know, and then I hope, instead of just jumping in on day 1, you have a process, you approach these methodically, and you don't treat it like the casino. The reason so many fail in short-term trading is so many treat it like a casino. Treat it like a entrepreneurial endeavor. Okay, you're risking your money to grow your money, and you're doing that with the markets instead of opening a landscaping company or a restaurant or a real estate company. Approach it like that. Have a good process, and you can make a lot of money trading IPOs if you're patient. All right, everyone, drop me a comment, and we'll see you on the next video.